Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it's Wednesday, and basically the opposite of yesterday, today. So this has pretty much been the market that we've been dealing with, and I feel like, you know, you have the TV on in the background, and everyone's like, what's the message of the market? What does the strong U.S. dollar mean? What does the last 2 days mean? What does last week mean? What does that mean? The whole, you know, everyone wants to put meaning onto the action, but the bottom line is really, you know, we've been in this choppy range, and it's been very, very stock specific, and you've had to really identify your time frame. And for me, I think I have to change my little active time frame to the 50-day, because we've been up and through, we've been below the 8 and 21 day probably 20 times this year, and back above it 20 times this year. So every time I get out of my positions, you know, there's been no follow through. So maybe I got to change it to the 50-day, because we've been in such a tight range. Those two moving averages are right next to each other, where usually you could be in a rally for 3 to 6 months and not have to touch things, because, you know, they just trail them. But anyway, I wish I could say that I crushed it today. I didn't. All I know is I could have been crushed, because I did come in net short today. After yesterday's move, I was thinking perhaps we're going to see some downside action, or at least another day. Didn't think we were going to get crushed, but you know, it got me out of my stock, got me short on the close. And then if you guys do trade, you probably saw them bidding up the spiders. You know, yesterday between 4 o'clock and 4:15, I added to that short. But today I came in at least with a plan on how to get out, how to readjust, and you know, not be, you know, so upset and hate the market, hate life, and hate the day, because it could have easily been that way, coming in short and shorting all day long and maybe capitulating it out at the end of the day. So, you know, let's quickly go to the spiders, okay? You know, spiders yesterday did break this upper area. So in any, you know, typical market, or in one of the, even recently, you know, when you had this little breakout failure here, it led to, you know, a pretty big decline. When you had your somewhat of a breakout failure here, it led to a somewhat, you know, big decline. So yesterday, when we broke the 8 and 21 day, why not get out of some stocks, okay? just to reevaluate. So, you know, this made sense, getting out of the way. You had a small little ascending channel also, all right? But again, one day breaking the 8 and 21 day, okay, gives you a little caution, but then you go to a little bit more, I guess, the macro trend. You know, you could start, if you started from here and you go to, you know, here, never broke the macro trend. If you want to start from this gap up, which some people have been doing, you know, didn't break that. So, you know, we've tailed into it a few times, but ultimately it was just fine, okay? And, you know, you go back to this. So what do you do? Okay, so for me, you know, I said, what's resistance 1, 2, and 3? So where maybe will I add some to my short to trade it out of it and then maybe look to get long? Where could I go put on some strong names, which I talked about? I'm like, if you have thick skin, these are the 8, 9 stocks that I think are acting well, that you could be in and trade around them, you know, maybe even with hedges, you know, or just day trade, whatever it is. So, you know, I actually put even a chart out there with a micro look at the spiders. So if you go back to the chart, okay, you talk about retracement rules. Okay, so if you just go right here for a second, in my mind, if the bears or the sellers had some control, they probably wouldn't let this spot get reclaimed. This 211.28. This would be resistance 1 if the bears or the sellers had strength and it was a feeble rally. That's where it would stall. And then your next spot probably would be here, and this would have been pushing the envelope, and I wouldn't stick around to there. So you go back to the 5-minute chart, which is very helpful, okay, you know, to start the day. So, you know, on the 5-minute chart, I looked and I was like, okay, you know, let me see, you know, what's what. Okay, here is the new day. So, you know, you drew a line across saying this is pretty much resistance 1. I just drew it right there, which was about, you know, 211.40. Okay, then really resistance 2 came in right around here, 211.90, and then resistance 3 is would it trade into the gap and fill it. You know, so, you know, in this move, the retracement, really this is where it should have stopped if the taper is really weak, and if the computers wanted to push the envelope, maybe they could have pushed it to there. So, you know, on the open, you know, we got it as high to 211.36, and then it pulled in a little bit. You know, if you remember, if you trade, you know, especially the spiders, you know that in the first 3 minutes, it pulled back down to like 211, and I was like, ooh, they're letting me out. Let me get out of some. So I got out of half my spiders. Then it came back up a little bit to like 211.20, and then I added a little bit, and then I said to myself, if we break above the morning high, which was like 211.40, I am done. I don't care. You know, I'm not fighting this today. I'm not rolling up shorts. I don't have a short thesis. I actually like being long, and I hated the world last night going home tier 2 short. You know, I didn't want to wish for bad news. I'm not a bad news type of guy. So anyway, you know, you look at the chart again, this was in my head to stop. So yeah, this, and then boom. So right here, I was out of my short. No big deal. You know, lost money here and said, I'm done with it. I'll just give it some space, and you know, that's that. It took back this. Maybe I'll try and short it here. Maybe I'll try and short it there. Or, you know, I'm just going to look for some quality longs and not try and fight this up move because of yesterday, because day in, day out hasn't really mattered much. Okay, so basically, this was, you know, your move up into the highs. So now, okay, into this, all right, little bit of a flag. I am basically flat now. I'm saying, okay, I'm at least happy with myself. I used my discipline. I got out 211.40, and now let's see if there's some commitment because they just squeezed every short, you know, before potentially, you know, more follow through to the upside. So right in here on my virtual trading floor, just so you know, we have a virtual trading floor with a community that interacts, that talks about ideas, that points out news, that looks for setups. So all of a sudden, the spiders that I was short overnight, that was showed red on the VTF, went to show green. So everyone knows that Red Dog is now in the spiders. So I don't know if I had time to tweet it out there, but you know, in Redler All Access, I had time to actually say I covered my short, I think at 211.40, and then I did say that a little bit later in you know, my public Twitter feed because people were asking me questions. You know, when we were at around 211.80, I'm like, I'm done with it. So anyway, you go back to the chart. So now it's a new day, right? It's still only 10:30. This is the first move that happened. You know, then the question was, would it get some follow through? So here I was looking at it, I'm like, I'm in tier 1, it gets above 21.80 or 211.85, I'm going to tier 2. And on that move, I got to tier 2. And then, you know, it wound up having a nice move. So with that being said, it wound up having, you know, a big daily move all the way up to take out the prior high, which was 212.50, 1280. You know, so that basically just negated this whole power. So, you know, I'm not saying now it's going to be all-time highs tomorrow, but we shall see. So, you know, during the course of this rally, I was like, you know what, I just rode the market for, you know, a good point in the spiders. Let me get out of it and try and get into some stocks long, just in case we now maybe go inside and then up. Because tomorrow might be an inside day, or maybe tomorrow we're down a few handles. So if we're down a few handles, I want to be in strong stocks that might be able to go green and continue. So, you know, everyone's like, why are those the go-to list of names? Because I put together a go-to list at midday, and I'm like, you know, if you have thick skin, you probably could get into these somehow and then maybe be able to add to them when momentum strikes. So one of the names was NFLX. Why is NFLX a go-to stock? Because NFLX has been riding the 8-day moving average, great earnings, breakout move, held the 8-day, big move, held it again, and closed near, what is that, 52-week highs. So chances are, if you are short NFLX, you're probably worried. Okay, if you're long it, you're not on day 3, day 4, day 5, it's day 1, and hopefully you get a little follow through. And when I, you know, tweeted this, I think it was at 625. So this is a candidate to be long. Amazon, you know, definitely hard to deal with and gets wishy-washy at times, but overall, this is a big gap up after earnings, holding the 8 now. I mean, the 21-day above the 8 has a bit of a pivot here. So if it wants to go, it can go. It's why one of the only companies out there actually hiring, because their business is expanding. So as soon as they, you know, get everything together and raise prices or whatever they do, the margins are going to explode and their earnings power is probably going to go nuts. And hopefully they announce a 2 or 3 for 1 stock split. So, you know, this was, you know, a buy price. I'm actually long Amazon, and I think, you know, if it can get above this 435-ish area, you probably haven't moved back to the, you know, the post-earnings highs. So we'll see. Overall, this go-to nature, be in some, add if it breaks out. If you can't hold it, you know, it's hard. That's why thick skin for a stock like this. Apple also, you know, this stock got me out of it, you know, on that engulfing down day, because I didn't know if there would be another, right? We got in it here at 127.60. Big move back to highs. I got stopped out right there when it took, you know, when it went back below the prior high, saying, you know what, maybe there's going to be more downside. I was hoping to get a move here to buy it back, to retest this spot, and instead it just engulfed this whole action. So, you know, now question is, you know, can it make new all-time highs, and it's definitely in the cards to do so. It's starting to wedge now. You can maybe draw a little wedge. Maybe tomorrow you get a bit of an inside day. So if you want to be long small, next TBA or technical buy area or pivot comes in around 133, and then you have the highs here at 134.50. So this, just rebuilt itself real quick. So if you got out, you got to get back in, or if you got out here, maybe you bought the closer. Who knows what you did? Bottom line is, with a little bit of time, this is back in the game. So that's something that should remain, on the go-to list. BABA, in my opinion, still stays on the go-to list. If the market wants to hang in there. Why is it on the go-to list? It had good earnings, had a nice earnings gap, broke its descending channel here, and held above it, gave you a nice trade right there, and now it's trying to flag again. So with a little bit of time, perhaps you could be a buyer somewhere in here small, and then if big volume comes in and trades over 95, you get a little bit more momentum. So it's, in the game. What else is in the game? First of all, look at Goldman Sachs. Woo! What a move to new highs, hugging the 8-day during this entire rally. Morgan Stanley, had its first, big potent day, so maybe this gets back to those highs now. JP Morgan, a little wishy-washy right around here, but still wound up holding the 21-day. It's hit the 21-day a few times and held. So if you were, not too tight, you might be still in this, and there's another wedge-type pattern there. So as far as, let me think to myself, what other names? Strong names, go-to list. Some say Google, I don't think so. Google just, needs to really get out of this zone, and maybe at some point, if it were to get above 560 with power, it could act better and has room to 580, but it's too erratic and hard for me. Facebook, it regrouped. It's still, I guess, you could say this is some kind of descending flag here. Took back all of yesterday, so this is still in the game. But it's been so choppy for me that I didn't go back to this one today. But it looks okay if you're still in it. Some actually even looked at LinkedIn today. LinkedIn, from this lower level, if you weren't in it on earnings, which we don't take stock into earnings, some guys actually even took some, shorts afterwards or after the announcement. It's getting tight here. It closed relatively strong. So if it wants to get through this spot, perhaps this is just a cash flow trade, and that trade would be above 199-ish. Maybe it comes back and wants to test this gap. Still from 280 to 190-ish. That's 100 points off the highs or some. So maybe there is a trade there. So put that on the focus list. These are like more trades. These aren't things to swing because they're somewhat rebuilding and broken-ish. Some guys like to just buy the dip and like to use RSI, and they feel like they'd rather do that than play something that's trending and buying strength, because buying strength has been hard this year. So maybe that makes sense. I know a lot of guys I was talking to yesterday, like, oh, I'm in my second tier buying the airlines, and I'm like, I don't really see it yet. Maybe you get some kind of red dog reversal. You don't have to just, think about it. And today the airlines bounced. So granted, if you didn't take it long, you could have, you missed a little bit, but now, on a broken cash flow trade, perhaps, above this spot, you get a trade here in UAL to there. So this isn't like something you're trending in and you're holding. This is something that hopefully, if you were looking for a breakout move, here, with this flag pattern, you got out on this outside day, so now you might just have a trade back to there. Okay, Delta, what did you do? See if it reclaims the 200-day, but look at all this resistance. These are things that are just kind of cash flow type trades. Same thing with the IYT, I guess. First, somewhat engulfing day, matching a down day, but it's broken trend. It's been gross, but if you didn't, partake in this downside, you could try and play a little bounce. But these charts look a lot different than, the ones that are tight and near highs, and usually 52-week highs beget other 52-week highs. And, if you're hugging the 80, like this has been a great chart. You want to buy Goldman Sachs and you want to use your tier system, here's when it broke out breakout number 1, and then here was really breakout number 2, and this is when it cleared the prior high. You could have been buying the dip every time at the 8-day and even for some breakouts. So that's something that's a little easier than, buying something that's on the way down, thinking that you can catch a trade because it's oversold, because this could put you out of the business if you start too early with too big. Guys who tried to do that with a name like WYNN, and they haven't found a bounce yet. WYNN has been in this crazy downtrend for almost 2 years now. So if you've been trying to accumulate this thing because it's WYNN and you like Steve, You know what? You know, if you didn't trade it here when it broke the 8 and 21 day, or get out when it broke the 200 day, those are technical reasons to get out. And you were buying it just again because you liked the hotel, you made some money playing blackjack. You're annihilated. Annihilated and may never see your money back. So that's why I don't like to just buy things, you know, that are moving lower. You know, sometimes you get like a little red dog reversal and you could play it for a day and a half and then measure it to see if it builds. This tried to do it maybe a few times here. You know, but actually I don't even see any of them here. This isn't really a red dog reversal. This one reversed, but not really the same pattern. You know, so you didn't even get one of those reversals yet. But anyway, that's why I don't like to do the cost average game when things are moving to the downside. Usually when momentum breaks, the 8 and 21 day, you get out of the way, then you test some levels, and then you might be able to catch an active trade. But you know, if you're going to hold something, you want to make sure it's trending. So that's a good point for SHAK. A lot of guys were trading this to the long side. When were they trading it to the long side? When it broke the IPO high right here, hovered above the 8 and 21 day, then broke above the IPO high right there. Then you had a tight pattern, another breakout, still above the 8 and 21 day, another breakout. And then here, you know, on Twitter, you could earmark me because people are thanking me, but they're like, oh, you're a Monday quarterback. I'm like, no, I'm not. I said, if you didn't buy 52 and you didn't buy 66 and you didn't buy 77, I would not be buying 94 on Friday. And I actually got a locate, thank goodness, and got short. You know, I made some money, but unfortunately, I'm an idiot on the short side. I could have made a heck of a lot of money. So, you know, traders like us, we do not chase this. We did not buy this. We sold this. We're scrambling for shorts. But traders that trade momentum, we're buying this, buying that, great patterns, buying here. And now, maybe tomorrow, okay, we'll see what happens. Maybe we get a red dog reversal around the 21 day, which is like the same type of trade that happened here. We'll see. But this is pretty broken, and it's very overvalued, and this definitely knocked the teeth out of some people who were, you know, stuck in the long, but I think most longs probably sold. This was probably just shorts covering that were stuck, that didn't have stock that they could, you know, get, and just driving it up because so the float was tight. But anyway, we'll see what happens here tomorrow. Different trade above the 8 and 21 day. This is when the fever broke, regrouped, another nice trade right there, and now we'll see what happens there. So when people say, oh, people, chart chaser. No one chases charts. We look at charts, we identify tight patterns, and we try and use a tier system to navigate it. You know, today charts helped me a lot with my retracement rules because I was like, if we take back a third of yesterday, you know, I better just get out of my shorts and try and figure out how to get back long because the trend that we've been in that's been choppy and erratic, you know, is still intact, and I want to participate. But I want to participate in a way that's comfortable for me. So that's why I'm pretty small in a lot of the names that you'll see in the VTF or at the bottom of my disclosure at the recap today. So in closing, hasn't been an easy market, okay? Every time it looks like we might correct, we don't. If you're too tight, then loosen up a little bit as far as your ranges and just have less shares. If you're trying to catch a falling knife and you're getting, you know, put out to pasture or whatever that term is, don't do it. Look for the red dog reversal. If you're trying to be in a swing trade, try and be in it if it's trending higher, not, you know, buying, you know, levels lower, accumulating it because you never know when it's going to stop doing that. And try and have a plan A, B, and C every day. And when the market confirms one of them, you're prepared enough to have some quick feet to at least not lose more than you need to, and then maybe switch some gears, participate, and then get your mind ready for what could be, you know, more opportunities moving forward. So we'll see what happens tomorrow. It's Thursday. I hope you did okay today and made some moves and readjusted, and we'll just be back at it again tomorrow. Have a great night.